Gentlemen, this conversation is going to be an interesting one, specifically for me. First of all, Serge, BOAD turning 50. Congratulations.
Yeah, thank you.
You've done a fair bit of work over that period of time. But I want to start with Plan Joliba. Right? The region has come in, it's been hit by multiple crises. Climate change is a big one. Of course, there have been all sorts of economic problems across the region as well. Given everything that's been going on across the region, what's implementation of Plan Joliba been like so far?
Well, first of all, good morning to all. Thank you for having me. Well, the Plan Joliba is a definition of what we think is the good dynamic for our sub-region. It's clearly an ambition that is defined under this strategic plan. It's a plan by which we believe that investing in the sub-region is a must. The capital intensity that is needed is a must. We strongly believe that investing is a need. Capital is a need. That is something. That is, you can grant loans, but you have to repay at some point. And the problem we have is that you have to repay, usually on short-term maturities, which is, from our standpoint, not compatible with the need of development of our region. Again, so we need, development is all about capital intensity, the lowest possible rates, and the longer possible maturities, as simple as that. So the Plan Joliba is about 3,300 billion CFA franc, which is approximately more than 5 billion euro. At this point in time, we have reached, as of mid-2023, we have reached approximately half of it, which is we have injected in the sub-region approximately 3 billion euros. And I strongly believe that this is only a drop when you look at, for example, the SDGs, the needs in terms of SDGs. We have, His Excellency have mentioned a few numbers this morning for our sub-region. It's all about 300 billion per year. How can we do that? The only way to do it is to attract investors. To invest, capital is a must. Now, we strongly believe that we need to solve a number of problems, simple and basic things. Infrastructure. How do we move from point A to point B? How do we commute from point A to point B? How do we speak from point A to point B? It's all about digitalization, it's all about ports, airports, roads, etc. Second thing, everything about energy. Who can deny that energy is a sector that we need, we definitely to bring solutions. Energy, it's all about technology, it's all about capital intensivity. Then everything related to agriculture, from food security to agribusiness. How do we industrialize our business? How do we create value? Now, the fourth thing is everything related to housing, from social housing to affordable housing. And the last, I don't want to be too long here, is everything related to human capital, health, and education. As you know, we are in a fast-growing population region, which doubles basically every 25 years, which literally means that in 25 years we will be as populated as the US. So one can see it as a threat. We, through the Joliba plan, we see it as an opportunity. In a nutshell, this is what I wanted to point out.
Jeremy, when I was here last year in conversation with your predecessor, Adeyemi, at the time the question I asked him was, how do we get African countries to trust each other when it comes to payments? fast forward to this year, and one of the big stories in 2023 has been all this talk about de-dollarization, because our currencies have been up and down, they've been losing a fair bit of value all over the place. So I want to start with that, right? The question around de-dollarization. A, is it viable? And B, how do we even get there?
Yeah, thank you for that question, and good morning to everyone. Yeah, it's something, obviously, if we want to encourage inter-Africa trade, that it would definitely be easier if we are able to trade in our own African currencies. Now, in terms of de-dollarization, as to whether it would be easy, I think there are a lot of factors. There's political factors, there's economic factors. We're many countries. So backstopping that, I think, would be a challenge. But I think there are things that we can do in terms of regional blocks. If you look at the UMWA region, at least we've got the CEFA, you know, and that makes trading a lot easier because you're not dealing with multiple currencies. So I think we definitely can move forward with that agenda, and that's, for example, as Ecobank in 35 countries, we've got our own payment platform where essentially we can move money instantly across those countries, you know, using mobile or electronic means. And working with PAPs, we're trying to see how we can do that. But we need to avoid the backstop of having to use the dollar as the conversion metric.
So essentially lean more into perhaps, you know, develop that habit, right, of making those payments, you know, Naira to the Egyptian pound, to the Ghanaian cedi, to the Kenyan shilling, to the South African rand. We essentially have to develop that trust in each other.
I think there's developing the trust, but I think, you know, if we're going to move currencies around, like let's say it's between CEFA and CD, there has to be enough trade both ways so that you don't end up with one currency ending up stuck in a way. So if there's trade both ways, then whatever currency comes here or goes there, at least you can use it for imports and exports. So I think the more that we can encourage trade, and we heard that in the other panel earlier, 14% inter-Africa trade. It's not enough, yeah? And if we don't learn the lesson now, during this crisis, I don't know when we're going to learn it. We've seen outflow of money, dollars, to the West. We've seen our currencies depreciate. We are paying for those dollars. There's not enough dollars. And it's just it's a rapidly dwindling cycle. If we were trading among our own currencies, we wouldn't be relying on those dollars. So I think that's something we definitely have to push.
All right, gentlemen, this question is to both of you. Another one of the meta-narratives, right, for this year. Federal Reserve, Bank of England, the ECB, well, except the Bank of Japan. Pretty much all of the big central banks have all been raising rates, right, quite aggressively. And as you point out, you know, if US Treasuries are yielding, what, 5%, why would you do investing, right, into Africa? From where you stand, though, has that killed off the market for green finance in Africa?
Well, if I may, Jeremy. Well, the green finance market, as Julien has mentioned earlier, has increased a lot, worldwide, a lot. Investors are looking for, I mean, when it comes to general purpose financing, I think this market is closed. Investors are willing to know where and to which extent where are they investing. So the channeling of investors, of investment today is a must. So you have to define exactly what projects you are investing in, which country, what are the impacts in terms of employment, notably. And it's something I've discussed with AJ Banga, chairman of World Bank, and I think that we come to this common understanding and need that the employment content in each and every project is a must. Now, when it comes more specifically to climate finance, everything related to mitigation on one hand, but for Africa it's much more everything related to adaptation. When you clearly define all this in a traceable ways, I think you have means and opportunities to attract investors. They want to know where, how, impact, etc. And you can attract investors. Now, the question of the return. I strongly believe that we live in an area where interest rates are very high and will remain as such still for a number of years, unfortunately. Unfortunately. That is the reality. Now, how do we cope with that? The way we cope with it, you know, there are two ways for banks like us to do our business, to access to the market. The first window is capital market. But as the rates are high, the interest rates are high, even when you have a strong rating, which is our case, we Baa1, which is investment grade, but still we have observed that our bonds have widened by more than 400 basis points. You know, we had issued in 2021 750 million euro at 2.75%. That was for a maturity of 12 years. This bond trades today, as we speak, 400 basis points above. All right? So this is the premium requested by the market as we speak. But we have to cope with it. So that's the international market. The other window is the concessional fund. But I think that we need to be smart. We need to be bright. We need to think out of the box here. The reality is, and I have one question, do we talk to philanthropists or do we do it on a professional basis? I don't think we do it, you see, because they are dedicated to this business. So my point is, the more concessional our business is, the better it is, so that we can come up to our shareholders, clients with how do we do it? It's always a word. When you mix funding, blending funding. That's it. So this is our job, in the sense that we are supposed to be counter-cyclical, and being counter-cyclical literally means that if the market pays 6 or 7%, we cannot provide liquidity to our investors. We cannot fund our project in our region at this level. Impossible. It doesn't work.
Indeed.
Because from a sustainability standpoint, for ministers of finance, and I know there are a number here, see my brother Sanina Iyaya here, it doesn't work. So this is where we are.
Jeremy, from your perspective, with rates this high, is the green finance market dead?
No, absolutely not. It's not dead, but it's just much more difficult, I think, as Serge has said, right? Because I think one of the things is that when you're looking at renewable green finance, especially in the African continent, it's very sensitive to the cost of capital. They were saying something like, if there's a 200 basis point increase in the cost of capital, it can increase the cost of power by 20%. And now if you imagine that cost of power is up 20% and the flow through into the economy, it's quite severe. Obviously, we're going through a particular period macroeconomically now. It's not going to be like that forever. But I think Africa has a lot of good projects. You know, I mean, when you look at some countries, they're at 90% green energy already, whether it's hydro or others. We have great projects. We have to package them well. We have to have greater dialogue. We have to change the narrative on Africa, because I think that's part of the problem. There's just one narrative about Africa. We're 55 countries.
It's all very risky.
Yeah, it's all very risky. And then you have one situation in one market and people assume it's everywhere else. So I think we've all got to do that job of changing that narrative.
I want to wrap up with a question to both of you, because I know both of the institutions that you run have issued sustainability-linked bonds at some point. I believe in the BOD's case, 750 million euros issued in 2021, I believe. You issued one that was 350 million euros. My apologies. But looking at the split of orders on your 750 million euro one, I found something interesting here, because the split at the time was 80% Europe, 17% United States. And looking at all the institutions that we have represented in the room at the moment, and all the markets that we have represented in Africa at the moment, I wonder, if we were to come to market again, can we raise that same amount of money at a lower price in Africa only?
The long answer is no, not at this point in time. You know, when we raised it in 2021, we were 4 times oversubscribed. Yeah, 350 million, and it was about 8.75%. Going into the markets now, we've just seen these spreads just shoot, right? Which makes, as I said earlier, funding these projects.
And even governments are borrowing at 18%,
Yeah,
20%.
exactly. So I don't think we can definitely raise the money as we did even just 2 years ago. But we shouldn't be pessimistic. It won't be like that forever, right? Where hopefully we'll see the cycles easing, rates starting to come down, and there's still concessional financing that's available, but we need to just align our biggest and best projects to that and make sure we deliver.
Serge?
Well, I would tend to say that I would take the money wherever the money comes from, you know, either Africa, China, I mean.
So should we expect a panda bond,
Yeah, I mean,
a samurai bond at some
that
point?
Perspective, you know, you give me money, I would take it. I have no issue with that. Now, you have institutional investors, which literally means that it is their business to invest in our project, in our region. That's why we usually say that BOAD is a go-to bank. And we translate it in French as a cœur de cible, which literally means that whoever you are in the world, you pay any interest into our sub-region, we are the go-to bank to go through. And from that perspective, well, we talk to investors. If you take an investor like BlackRock has approximately, slightly less now because of the crisis, but they were like $10 billion under management. You know, I would be very happy with a drop of this money. And the way we organize ourselves in the bank is to be as professional as possible, you know, to tap into these pockets. BlackRock, CalPERS, Bluecrest, Blackstone, we speak to these people. And the more stable we are, the more predictable we are, the stronger our economies are, the better it is. And I have no doubt that we can attract all these monies, investors' money, believing in our capacity to pay decent return. And these return, we strongly believe that they can be compatible with their expected return, but also with the growth we have in the region. So I think the more integrated we are into the worldwide system, the better it is.
I don't think I can find better words to wrap up this conversation with. Gentlemen, Serge Ekué, Jeremy AWORI, thank you very much.
Thank you very much.
Thank you.